All right, guys. So it's Friday, February 11th, 2022. We are still chopping around, trying to break out of the new kind of balance area up here now. So let's take a look. I'll go to the 10 minute. And so this whole area here now is what? 1, 2, 3, 4, 5, 6, basically 7 days in a row. We've been playing around now in this 44.45 to 45.78 larger structure area. Um, and so this morning we find ourselves right back at about 50% of 7 days worth of price action here. Um, Not really an ideal market for pinpointing perfect entries because there are so many different ledges and price structures to actually kind of rely on here. So it just is what it is. And some days we come in and we have to say this, often that we're playing around in so much chop that there's just a lot of valid levels. There's no other way to really get around it. And then, hey, sometimes there's markets where we're actually getting a trend, and there's some levels that stick out a little bit more than other levels, but not in this. So let's see what we can eke out of the charts here. Remember yesterday, we said we still had the bearish divergences up off the highs. Um, and to be honest with you, I don't even remember what I said in the pre-market there, so I don't really recall what ended up happening. But we got a really nice attempt to break out, and then shortly towards the end of our trading session, we came up right to basically the high of the overnight session within a few ticks and got a really violent sell-off. So that was a really, I think for me, was a really obvious clue. If we were over here looking, I just moved that whole thing. If we were over here looking at this in real time together, that well, we were finishing our session, so I don't know if I was really narrating at the last minute or two there. But going into 8 a.m., that failure right there was a major clue to me, especially because we did have some pretty obvious bearish divergence on a 10 minute, on our 3 minute, and our short time frames. It was a pretty obvious clue to me that we're probably not going to be breaking out here. This is another one of those attempts to kind of come up and break through a level and fail right in front of the high. See it all the time. The other one we see all the time, really clear bearish signal to sell the market, pulls back, peaks above the high of where we would expect the market to hold and fail from, and then fails. So that's our peak above and fail, or on the other side would be kind of a peak below and bounce. And then this is kind of the other version of that. It's like it kind of gets almost all the way up to the high and then just kind of fails. The whole bottom drops out. And they're kind of similar well, they're different patterns that indicate to me kind of a similar expectation for what could be coming. Again, anything's possible in trading, right? So who knows? So again, we're kind of trading back and forth within this 7, 8 day range, and we're back up to basically 50% of all this crap. So might be a little bit messy in here. Let's go up to the ultra high time frames. We'll dial on down. We are back to the end of the week. So might want to just look at that weekly chart one last time here a little bit more, scrutinize it just a little bit more. So let's see here. Our quarterly chart, yeah, doesn't look like anything's changed. Again, we've chopped up and down in the same 7 day range, and we're at 50% of that range. So this candle actually looks, literally, if we took a picture of this and went back a week ago and looked at a picture of this, it literally hasn't changed at all. Go down to the monthly and still really can't say anything because for a month, for a week and a half, we've been chopping around. Let's look at the weekly here. We're closing at the end of today. And so what kind of sticks out to me is just the candlesticks themselves, right? Because we came up, and how many times have I beaten this into your heads? I'm so proud that we really talked about this level and emphasized the importance of it. Came up, failed, and that candle right there, that last weekly candle, to me, even though it was a green bar or a blue bar in my color scheme here, that didn't really float my boat for the bulls, especially pushing into that level. It was an expectation, 61.8 retrace, previous major support, swing low. blah blah blah. Bearish. We had the bearish divergence. Remember the daily and the 4 hour, both showing bearish divergence when we pushed into that zone. And now this new weekly candle, we attempted to go ahead and break through the high, and we couldn't get through it. We came, and this is again the high here of last week was 86. Market got some type of pullback, attempted to come back up and break through, failed 1 point in front of the high. So not really a good kind of omen for the bulls in this local area right here. And if this weekly candle, which again is going to close at the end of today, if this weekly candle closes the way it looks now, if we start to sell off this morning, or if we close where we are now or lower than where we are right now, we now have two major doji bars up top right into an expected resistance. What does that say to me? We got to go back down here and check some other prices out, right? So we'll see what happens. That's one potential scenario. Anything's possible. They could pull back and find some strong support and rip. But for right now, that's what the weekly is telling me if it closes like that. And so let's get down now to our daily. So remember, a few days ago, we said coming into, I guess, going into the 9th. So 2 days ago, we came in and talked about the bullish divergence down here. So the expectation was for a potential bullish push, and we said our target was going to be 78.75 up here and 86. And sure enough, market came up. I think we even tagged 78.75, got a pretty nice little pullback from it, and then came right to 85. Well, 86 was the target, came right to 85 and failed. And so now, right up top here, this is the issue. We did push down 1 point. So the market did come to 86, pull back, come to 85. So technically, this is a lower high compared to this high, and so there wouldn't be divergence. One thing I would say is that it's so close, especially on a daily chart. You basically, if you look at the two highs, they look like they're the same thing. But if you look at the RVI, I mean, there's an obvious discrepancy there. A much larger push lower compared to price. So if you loosely interpret it, you could probably say, well, we got a double top here for all intents and purposes, and there's definitely a bearish divergence. You could look at it like that, or you could just say it was a test of a major bearish divergence. So back here was the divergence. We had the daily, we had the 4 hour, we had the 60-minute, we had everything else, and then this was just an attempt to break through, and they couldn't break. So rather than even worrying about seeing a divergence, that was almost a confirmation that the bears were going to come back in when they couldn't get through. So I guess take from that what you will. On the pullback here, we have pushed to a lower low compared to this low back here. RVI also kind of starting to push lower as well. Of course, when this candle closes at the end of today, this RVI might not close right there. So if it closes higher, we'll technically have a little bit peak below in price, and this RVI is actually a little bit higher. So I'm going to be looking at that because, again, we're almost have this bearish tint to things because we failed and we're pulling back. If this ends up closing with a bullish daily divergence, this could be our fake out for the bears. I had a meeting last night with the Las Vegas Day Trading Association, and there's this really, well, I don't know how well of a trader he is, but he seemed really knowledgeable on volume profile and auction theory. And he's like, dude, everything is pointing to lower. Like, I'm going to be short in the market tonight with the expectation for lower. That's kind of our expectation here as well because of what happened here that I just mentioned. But that doesn't mean it has to happen. And because anything's possible, if we do end up, like I said, closing the way it closes, we could have a bullish divergence here. And next thing we know, at the beginning of next week, we could be breaking out of that resistance zone. All right, spend enough time up there on the daily. Let's get into the intraday time frames. Going into our 4 hour here, got a pretty good bullish divergence from the overnight low. We're bouncing again off our expected support area. It's kind of interesting because the top expected resistance zone, the bottom expected support zone is basically worked a charm here for a week and a half now, maybe even 2 weeks. In fact, going back here, when we were chopping back and forth here, this was where we expected resistance originally. So we had this zone, we had this zone, we had this zone. So we've basically just been chopping and chopping. And on the 4 hour, outside of seeing the bearish divergence on that 85 test of the 86 high, we have a bullish divergence down here. So potential for that follow through this morning. Of course, we're going to have to talk about all the levels right above us here that are going to be trouble for any type of bullish push this morning. So we'll look at that. Let's go down to the 60-minute and get the levels on the chart and take a look here. So this is where we're at. Again, 50% of the range for a week, so probably not the sexiest area to be trading in the chart. In fact, my first mentor, he was like, if you're right in the middle of the balance area, because he looked a little bit more at volume profile, he's like, you just don't trade. You don't trade within that little area because it's so risky. But let's take a look here and see what we have up above us. So notice where we're failing right now. From the high of yesterday all the way down to our overnight low, where we do have a 60-minute and a 4-hour bullish divergence, we push, we find resistance where? The 38% retracement. It did peak a little bit above by 1.5 and came, 2 points, and is now pulling back for just about, 10 points at the moment. So if we can pull back, hold, and bounce up through the high we made, which is our overnight high, I want to say, yeah, so the overnight high, what are we pushing back up into? Well, I just mentioned something about that 1450 level, and remember, I said I actually altered it based on some recent price action to 1550. So there's a nice major swing low at 1450. I think there might be some relevancy right into 1550. And just to add a little bit, another level of fuckness to this, we've got another level right there. So there's, what's the low? 45, 1250. You guys should remember that 12. It's been pretty, because the 1450, that area, remember we came right up to 1250 a few times there. You can't see it on a 60-minute chart, but that high right there was about 1250. There was 1250 again. There was a push right up into 1250 and failure on that. Again, we can't see the details. I'm sure there was a lot of interaction right there. So basically, if we get through the high of the overnight session, it's, like I said, a little clusterfuck right here. We've got the swing low at 1250. That's been relevant way in the past. We've got the 1450 swing low, which again was the high of last week, and a major resistance zone from last week, and has a lot of relevancy based on other price action. But then, like I said, 1450 can actually be shifted up into 1550. For anyone who was here before the pre-market session started, I showed you the reason why. So if we do push up this morning, it's a kind of a range from 1250 to 1550 right there that I think makes a lot of sense. And then let's take a look. If they get through there, the 50% retrace is just up at 19. So if we can't hold below 1550, potential for them, and I'm saying this just because we see it happen so often, even when I don't see a price structure there, a push right to the 50 and a failure is not something to ignore. Could potentially happen. Outside of that, after that, we're all the way back up, and who knows? Like I said, it's such a mess right in here that there's just so much garbage that we're in. I don't know if it makes sense to be taking shorts at every single level hoping for a pullback. It might actually make sense because there's so much crap up in here and there's so much structure to maybe, if the bulls really find some strength, we see the momentum to jump in on a long and start taking profit up into these areas rather than trying to fade the market. And again, because we see the market doing this up and down. I mean, down 50 points, up 50 points, down 100 points, up 100 points. Push out of that zone, come up into our next structure area, push down 50 points, push up 50 points, push down 50 points. So who knows, after this pullback and with a bullish divergence off the overnight low, this could, rather than even playing around in here, this could be a nice straight shot right back to the top of the range this morning. Just going from the most recent historical price action, wouldn't be surprising to see a major range again. And again, what have we been doing? Pulling back from 45.70 to 44. Yeah, I mean literally 100 points back, 100 points back up, 100 points back down. So don't be too married to trying to fade this move up in here. It very well could just go ahead and take you out all the way to the top. So be aware of that. And what else? As far as what we're pushing up into, again, that area that I mentioned, that 61.8 is a possibility, but I would urge you to be a little patient in here, and you might actually want to find, again, if there's some type of nice support, a really nice buy signal, it starts to get some bullish momentum, and you get a long, to me, it'd make more sense to maybe take profit into these zones rather than trying to fade it. Let's go down to the intermediate just to see if there are any relevant levels to mention before the market opens. It's been a pretty long pre-market here, and we're almost to the open. So let me just see really quickly here. We already established 1250 to 1550, a 3-point range. And then above that, we talked about the 61.8 retrace of the whole push down from the previous daily high up around that 34. Again, look at how many friggin' levels are in here, and look at how much chop there is. So it's going to be difficult to really tell you this level is going to be a little bit more important than this one. On the flip side, so real quick, I got to make this super quick. On the pullback from the high we just made, the 38 retrace is lining up right with the 2 prediction points and our overnight resistance right around 90. So somewhere around 90 into 87 there, another 3-point range, potential for there to be some interaction. Any deeper, I think that 50% retrace around 79.50 to 80.50 there, that little 1-point area, looks pretty nice to me as well. Of course, any deeper, we come into this, for lack of a better word, clusterfuck of levels right here. The previous daily low, our orange power level, a KP, and that 74.50, which has worked a charm, like all overnight, holding 74.50, and then in the past, this 74.50 has been like magic for days and days and days, despite it being a completely sideways market. So those are some things to look at on the pullback here. Of course, all the eye levels on the chart are going to be important. And if we don't hold and we start selling off, we got 45.50 and then a nice cluster down around 44.30. And then it's back into 15 to 18 there. So I got to run. We got the market opening here. Have a great weekend. We'll see you back on Monday.